All right, welcome back everybody. My name's Austin. Bitcoin is getting massive coverage today in the media. From Yahoo Finance, Bitcoin breaks $32,000 as 2020 surge continues into the new year. Being reported out of CNN Business on the same day today, Bitcoin soars past $33,000, its highest ever. Even being reported right out of Nasdaq.com, Bitcoin will rise above $100,000 in 2021. They're calling it. Now, subscribers of this channel know this. You like this. With every video, our goal is to demystify the cryptocurrency market for you, for me. So in today's video, I want you to check the timestamps, and like always, we'll go over the latest cryptocurrency news. So first question we have to answer is, why is Bitcoin pumping so much? And this time around, why are the altcoins lagging so much against Bitcoin? Well, Bitcoin right now is in free, unrestrained price discovery at the moment. As soon as it passed all-time highs, as soon as it passed $20,000, most alts are not. Bitcoin has the infrastructure and liquidity to take institutional-grade investment. Alts are underdeveloped. Plus, regulatory authorities cleaning up illegal security sales dampens confidence in alts. So Bitcoin is just fundamentally different, and institutions especially understand this. That's why Bitcoin dominance is growing. Now, alts still below their all-time highs have resistance keeping them down. Alts may be worth revisiting for a swing trade after ETH breaks all-time high. Interesting. How close is Ethereum to hitting its all-time high? Well, if we look, Ethereum right now is almost at $800, and it is 50% away from hitting its all-time high, which it hit over 1,000 days ago. I would suspect that we start to see a mini alt season after Ethereum crosses $1,000 and nears its all-time highs. I am not a registered financial advisor, but that's what I would suspect. Now, especially as we're watching XRP and other non-regulated altcoins get in trouble with the SEC, many of you have been asking about January 14th and Blockstack's SEC-compliant Stacks token. You've been asking about it, we're going to talk about it. But make no mistake, BTC is the market mover, and I am starting to see more and more people pick up on. We aren't really seeing those 30 to 40% corrections that were oh so common back in 2017. Let me play you 60 seconds of the FunkyCryptoPodcast. I'm going to link the whole episode down below. Michael Saylor comments that Bitcoin, from a maturity standpoint, is at a very different place in the year 2021. Watch this.
You've got insurance companies, corporations, treasuries, institutional investors. They're buying this stuff instead of gold. They're buying it to hold it for a decade as an inflation hedge. They're not using leverage. They're not using offshore exchanges. They're not speculators. Their mindset is, I'm going to hold it for 10 years. What can I buy that's better? If I sell it, I'm going to generate a tax bill, and I'm going to buy something inferior. So they're not going to sell it, and that means you're not going to see, I think, that kind of volatility.
So you think, I mean, I've heard you talk about, you think the volatility is going to be tamped down a little bit in this cycle.
I think it already is. I mean, if you look at it, the volatility of Bitcoin is decreasing since March, and the volatility of everything else is increasing. Let me give you one more metaphor, Ben.
Yes. I love metaphors.
LeBron James started playing basketball at age 9.
Yes.
And by age 18, all the scouts knew this is the best high school basketball player in the world, and he's probably one of the best professional basketball players in the world. At age 13, he probably punched somebody on the court, and he might have missed a game at 15 because he smoked some weed. And he's a little bit volatile here and there because he's at age 11. Maybe he got pissed off at someone. And you're like, oh, LeBron James is volatile. When's he going to blow up again? From age 19 to age 29, LeBron James crushed everybody and everything in his way. And you probably should have signed him, because just because someone's first 10 years, they were promising and volatile, doesn't mean that the next 10 years of the athlete is going to be an exact repeat. It isn't, man. When you're 25-year-old, you don't act like when you were 13 years old. And Bitcoin is moving from its first 10 years to its next 10 years. And it's a much more mature asset.
That is great perspective. I like it. I'm going to subscribe. I want to stay up to date. Now, obviously, if you invest in Bitcoin, still expect massive drops. Don't be caught off guard. But right now, I encourage you, leave a comment. Let me know what you think about Bitcoin's price action in this first week of this new year. Okay, next piece of news for Blockstack and the Stacks token. Stacks 2.0 is officially launching on January 14th, 2021, meaning apps and smart contracts will be available on Bitcoin. This is a very big deal. Let me explain exactly what this means. And just as a reminder, the STX token, currently mid-cap, ranked number 54 in terms of most valuable cryptocurrencies by market cap. And you may remember, we actually did a bit of a deep dive 3 months ago on the Stacks token as one of the safer bets, quote unquote, in cryptocurrency because they were already cleared by the SEC at the start. I'll link this down below if you want broad strokes on the Stacks token. But since then, Blockstacks did hit us up to help pay for a sponsored review. They want people to know about their launch event happening this month. So let's answer the question, what Stacks 2.0 means for you. The user-owned internet will rise on Bitcoin. Stacks 2.0 blockchain is a layer 1 blockchain that enables apps and smart contracts on Bitcoin, unlocking innovation value and a new way to earn BTC. So how this affects you is that the implication here is DeFi is able to come to Bitcoin. Obviously, right now, Ethereum is the dominant player in the space, but the reason people have started choosing Bitcoin is because it offers a base layer that is more secure, more censorship resistant. Even Jack Dorsey, CEO of Twitter and Square, says, "The world will ultimately have one currency. The internet will have one currency. I personally believe that will be Bitcoin." So how can this be done? Well, it's because of a new smart contract language called Clarity. Clarity is a new language that brings smart contracts to Bitcoin. It is a decodable language, meaning you can know with certainty from the code itself what the program will do. Clarity eliminates entire classes of bugs, protects end users, and gives developers a safe way to build complex smart contracts. And the ecosystem, the Stacks ecosystem, is already being developed. In fact, right now, there are over 300,000 STX holders, hundreds of independent app developers, and over 35,000 community members. And one of the coolest things for me is that they offer something called stacking, where you can actually earn BTC by supporting the network. So it's like staking, only you can earn BTC back instead of a random token. By stacking or locking STX to the network and sending periodic transactions, STX holders actively support consensus, further securing the network and earning regular Bitcoin rewards. And let's just put this in comparison to other ways people potentially can earn BTC, like mining or DeFi lending. Stacking is a new, more secure way to earn Bitcoin without the need to build costly mining setups, leveraged third-party DeFi products built on potentially insecure Solidity contracts, or without the need to get involved in centralized lending schemes. With the Stacks 2.0 launch, over 300,000 STX holders will be able to earn BTC by holding STX and securing the network. So one big thing to note is that stacking allows enabled users to earn BTC by locking up their STX token. Now, some people are going to ask the question, wait, why build on BTC? It's more secure, it's most censorship resistant, but it's slower. Isn't that the biggest trade-off here? Well, actually, that's a little bit of a misconception of the 1-to-1 ratio of POX, proof of transfer, and that's actually where Stacks comes in. Stacks has what's known as POX, proof of transfer consensus, to get the benefits of the security of Bitcoin while providing the scalability and low transaction fees from the Stacks chain. The Stacks chain has microblocks for faster confirmations, so the speed is there, but then finality depends on Bitcoin, which is by design. So thousands of STX transactions can get finality through BTC blocks. And that's the revolution with all this. For those of you who want to know more about the January 14th Stacks 2.0 launch, I'm going to link this down below in the description if you want to start earning some BTC for helping to secure the network. Details are down below. All right, next piece of news. VanEck proposes an ETF for Bitcoin once again. So 2021 ETF-wise could be Bitcoin's year. VanEck has submitted an application to the U.S. Securities and Exchange Commission, SEC, for a VanEck Bitcoin Trust. And the reason people are so excited about a potential ETF is because this is huge from a traditional standpoint. An ETF is seen as advantageous because it trades on the stock market in much the same way as shares in popular companies such as Apple and Microsoft. So this would be a huge on-ramp for traditional investors. So far, the SEC has considered many applications for Bitcoin-based ETFs and rejected them all. Now, the last one from VanEck was actually September of 2019, so it's been over a year, and they withdrew it. But basically, the reason the SEC keeps rejecting it is because they expressed concerns that the Bitcoin market was not large enough or liquid enough to be ready for an exchange-traded product. I would say perception and size of Bitcoin has changed a lot since 2 years ago. We'll see. Next piece of news, major exchange BitREX to delist privacy coins Monero, Dash, and Zcash. Here are the details. In a release, the exchange said the coins markets will be removed on Friday, January 15th, and while BitREX gave no reason for the removals, exchanges around the world have been moving to delist coins that seek to preserve the privacy of their users as a way to be compliant with Know Your Customer, KYC, and anti-money laundering regulations that are spreading around the world. So possibly a sign to come, but maybe we'll see this with other exchanges. Somebody specifically on Twitter asked Kraken CEO Jesse Powell if they've heard anything regulation-wise, if they will be taking any action. I was just wondering if there were some regulatory pressure being brought to bear that you guys were aware of. Haven't heard of anything on the regulatory side. Presumably, it's something specific to their business, meaning BitREX's business. It'll be interesting to see how this story develops. Okay, that is the video. My name's Austin. See you tomorrow.